Hello and welcome to Business Incorporated Live on Channels Television. Well, it's been quite the week with major markets that we track was the TGIF trade. Let's see if there's some soccer. See what's coming up now. Angola turns debt into classrooms. The World Bank and Miga step in with loan guarantees for a debt for education swap aimed at strengthening the country's education sector. And we see global trade jitters as shipping giant Maersk suspends 2 key shipping services amid the escalating Iran conflict. And investors on an edge as February jobs report is set for release today. And it's great to have you join us. I'm Ladi Williams. Let's dive straight into these markets. Now we're seeing oil prices are climbing again as markets react to escalating tensions, and there we have it. Brent registering $87.04 a barrel, 1.91%. Another big jump on the road to $90 at this point. WTI crude 84.15 a barrel, 3.68% up, and at $84.15 a barrel, we've officially, that's for WTI, officially left that $70 range for now. After, flipping 58 to 60, and now at $84.15, 3.68% up. Natural gas also not left out there from the gains. $3.04, 1.33% up. So that's the color right there. Set for massive weekly rises. That's for the energy market. Let's get a check on metals now. Seeing gold prices, they tick higher as investors are seeking safety amid rising geopolitical tension in the Middle East. We see for spot gold 0.39%, smack on at $5,000 per ounce. Spot silver 1.14% there. The outperformer among the metals that we track. Platinum 0.65%, 2,143. Palladium 0.42%. Up. Copper 0.19%. Definitely we're seeing the safe haven trade now returning this week, after giving up, that was, I think, Monday, Tuesday. So that's the color right there for the metals market. All right, so other stories now. Tensions in the Middle East are now rippling into global energy markets and into everyday life in North Africa. In Egypt, government sources are warning that fuel prices may soon rise in response to sharp increases in the global oil costs linked to the ongoing conflict involving Iran. Officials say exceptional measures are being prepared, to manage the potential spikes in petrol and diesel prices as regional instability disrupts crude exports and pushes prices higher. With oil benchmarks hitting, multi-year highs and energy markets on edge, Egyptians and consumers worldwide could soon feel the impact at the pump. We're already feeling it right here in Nigeria and other parts of Africa. All right, to trade now. Global trade is scrambling as war in the Middle East threatens one of the world's busiest shipping routes. In response to escalating conflict involving Iran, major carriers, including Danish giant Maersk, they've suspended transit through the strategic Strait of Hormuz, a choke point that normally carries about 1/5 of the world's oil supplies. With threats of attacks and war risk insurance soaring, vessels are now, diverting around Africa's Cape of Good Hope, adding weeks and costs to journeys. The disruptions is already, rippling across energy markets, pushing oil prices higher and putting pressure on supply chains far beyond the Gulf. So that's the new, news there coming from Maersk. Then, in a major move to boost social investment and ease debt pressure, Angola, they've secured crucial backing from the World Bank and its insurance arm, Miga, for a pioneering debt for education initiative. Under the agreed plan, Luanda will refinance up to $400 million of expensive commercial debt on much better terms, thanks to international loan guarantees. The savings from lower interest costs will be redirected into building schools and improving education across the country, a strategy that could serve as a model for other, debt-stressed nations there, putting all of that into education. And to Southern Africa now, South Africa's external financial position just got stronger, offering a rare buffer in a volatile global economy. Latest data from the country's net foreign exchange reserves we see it climbed about $75.84 billion in February, up from the previous level, signaling improved liquidity and capacity to meet external obligations. Analysts say the rise reflects stronger capital inflows and a resilient currency backdrop, which could help Pretoria cushion the impacts of global shocks, including regional conflicts and market uncertainty. For investors and markets watching Africa's biggest economy, this reserve build-up is a key confidence signal right there in South Africa. Meanwhile, the mining industry in South Africa is moving to gain more control over the country's key mineral export infrastructure. Major mining firms are preparing to bid for a concession to design, build, and operate a new manganese export terminal in partnership with state-owned Transnet, a move that could, reshape the flow of one of the world's most strategic raw materials. Manganese, essential for steelmaking and battery production, is seen rising global demand, and local producers say, could boost South Africa's competitiveness on the global stage. All right, let's move on to our first conversation now. Definitely, it's been quite the first trading week of March, and we're going to zero into the fixed income and foreign exchange market in Nigeria for the first trading week amid the war in Iran. But let's see how the Naira has performed week to date. That's starting off from Monday till today, Friday, even though we don't have the close yet for Friday. But let's see the weekly performance for the Naira. Definitely about 0.68% down. That's talking about the week-to-date performance for the Naira this week. The drop definitely started most of last week, and we've seen that trend so far. But for this week, week-to-date, we're still expecting the close later on today. That's the close of market, but it's down about 0.68%. Let's bring in Mr. Bankole Odusanya now, Chief Dealer, Polaris Bank. Great to have you on the show, sir. Happy Friday.
Good afternoon, Laddie. Good to be here.
Good afternoon. So, looking at the performance of the Naira this week, it's down about 0.68% so far, looking at yesterday's close. Do you think what we've seen, play out in Iran, do you think it has something to do with this weakness we're seeing in the official market?
Yes, to an extent, we've seen a slowdown in global trade. It's not peculiar to Nigeria. We've seen a slowdown in global trade, so ordinarily flows to Nigeria would have paused a bit. We expect this to resume, as the probably de-escalation happens. But I mean, in the last 7 days since last Friday, we've seen movement of the Naira from 1350 to about 14 this morning. It tapered down units, of course, sold some of their position, but we have moved about 45.50 Naira in 1 week. So that's marginal weakening, headed back to 1,004 from as low as 1,310 that we saw 2 weeks ago. What also happened was that some demand data that were on standby when the dollar was on a slide, when rates were going down, those buyers who were simply waiting simply started buying once the head central bank actually picked up some funds at 1,310, 1,330 levels. So there was some kind of signaling, aside from the Iran conflict, there was some kind of signaling that the central bank did not want that rate to go below 1,003 levels. So demand that were pending were simply brought back to the market. And what we're seeing now is an active market, very liquid. There's no amount that you want that you won't find. And then we're seeing an uptick. Of course, this is third quarter and the end of first quarter, going into next quarter. So there's a lot of demand probably that have been pushed aside, waiting to see how low the rates will go before they came back.
Definitely so much to look out for in the FX market, and going into next week, we'll see how the war continues. Hopefully, we see some de-escalation going into next week. Well, let's zero in into the fixed income market now. The latest NTB auction showed very strong demand for the 364-day paper, but weaker demand for the shorter tenors. What does this tell us about investor appetite and liquidity conditions in the market right now?
Yes, if you compare in the last, between February 18th auction and the one that happened 2 days ago, the major difference here is that the demand is very high, but the players that were at the last auction were more of local participants, banks, PFAs, and co. So their yield interest was very high, and that's why it stopped at about 16.7. 2 weeks earlier, we saw rates close at 15.9, effective yield of about 19%. The effective yield of this last auction was at 20%. So the 100 basis point uptick that you're seeing is the appetite of the local investors who saw the MPC. I mean, largely we expected a major cut, but we saw just 50 basis points. So two major reasons why you saw that uptick. There was the cut at the MPC wasn't as sharp as expected, 50 basis points from 27 to 26.5. And then at this last auction, we saw a tapered demand from FPIs. So system is still very liquid, demand is still very high, but the yield request from local participants is still high because, I mean, the rate cut that we expected, maybe 100 basis points, 200 basis points, did not happen. So local participants are still very hungry for higher yield instruments.
Okay, so going into next week, what are you expecting for the FX market, and the fixed income market?
We expect FX rates to roll over around 1.4 levels. We expect that some surplus units who see these good levels would also sell into that market. On the fixed income market, the bullish run is going to continue because system liquidity right now exceeds 5.5 trillion. That was exacerbated because of federal allocation. Money supply also continues to improve, so central bank has a lot to do with OMO instruments to mop up or CRR. So we're expecting a lot more of regulatory action from central bank going into this month. But basically, it's a stable market on the FX side and very liquid on the Naira money market side too.
All right, thank you so much, Mr. Bankole Oduson, as a chief dealer at Polaris Bank. Thank you for sharing your Friday with us.
Thank you.
All right, let's go deeper into these markets now. Definitely looking at on the African continent, we see it's a mixed sentiment there. The Johannesburg Stock Exchange, we see a big drop right there at intraday, 1.49%, 118,000, losing 120K level. Then we see for the NGX All Share Index, 7 basis points higher there, 196,935 points. Yeah, we did get a positive close. Yesterday, after snapping the gains for this week, that was in the previous trade. All right, let's move over to EGX30. Yeah, that closed bigger, 2.29% yesterday, 47,516 points. We did see a lot of pressure for North Africa and also for the Gulf region. Then for the Nairobi Stock Exchange, 0.26% for the close yesterday, 207 points maintained, but down 0.26. Let's move over to the Gulf region now. We see, yeah, still pressure right there. Stock markets in the United Arab Emirates ended lower today, extending losses as investors grappled with, mounting uncertainty over potential escalation in the Middle East conflict. So you see a big 3.23% drop there for the Dubai's main share index. With blue chip developer MR Properties, that's been hammered, this week, retreating 4.8%. Budget airliner Air Arabia losing 4.9%. That was the picture right there. Then we see Emirates and Etihad Airways resumed limited services to major global cities from their UAE hubs today. Even as the threat of missile strikes, added pressure on airlines, scrambling to accommodate, passengers. If we flip over now, we'll see for the close yesterday, the TASI finished 0.8% higher, with Al Raji Bank rising 1.7% yesterday. The Qatari benchmark, that rose 1% with Qatar National Bank, the Gulf's biggest lender by assets, that was up 3.2%. Gains were limited by a 2.5% fall in petrochemical maker industries Qatar, and a 7% slide in Qatar Aluminium Manufacturing Corporation there. So that's the picture right there for the close yesterday. Let's move on to U.S. now. Stock futures fell today. They are putting equities on pace to add to their weekly declines. As oil price spiked, traders awaiting the new U.S. jobs data today. So we see investors that are going on the sidelines. 0.29% down for the Dow Jones Industrial Average. S&P futures 0.38% down, and the tech-heavy Nasdaq futures 0.47%. Already giving us direction on what Friday is going to look like at the close. To Asia-Pacific markets now, they staged a late comeback today after Wall Street declined, on worries over energy supplies, and definitely seeing oil prices break above that $80 per barrel mark overnight. But that eased Friday, but we see the Nikkei took that 0.62%. The Kospi has had quite a volatile week with big drops, double-digit drops and gains this week. We'll see a 2 basis points rise for the close. Hang Seng Index today 1.72%. Flip over to other parts there in the market. We see the Shanghai Composite 0.38%. Let's flip over now to Europe quickly. Now let's see what's playing out right there. We have Lars Holter with the details. Hello, Lars. How's it looking over there in Europe for the markets today?
Yeah, how you doing, Ladi? European markets obviously all down today. Starting in London, the FTSE 100 only dropping 0.7%. The others are going a bit further south. Paris and Frankfurt down around 0.9, almost 1%. And that happening on the last trading day of the week, with the weekend coming, can obviously be seen as a clear sign, Ladi, that investors are worried. They don't want to go long into this two-day break. It's been a week now since the start of the war in Iran, and that war was obviously the dominating topic on markets everywhere, definitely around the world, but certainly also in Europe, mostly because, of course, it led to the oil price shooting up between 16 and 19%. This high oil price alone will lead to higher inflation, mostly diminished economic growth, so investors are starting to price that all in.
Right, and heading back to the war in Iran now, we have a couple of companies and people working in companies in that region. Talk to us about the updates so far. How's it looking for some of those businesses and people working in those areas?
Yeah, it's interesting. First of all, how many of them there are. There's globally operating banks, engineering companies, corporate consultants, lots of companies, including from Germany and other European countries, have representatives stationed in the Middle East. And many, of course, in Israel, but even more in the United Arab Emirates, in Dubai, in Abu Dhabi, somewhere in Qatar. So altogether, there's tens of thousands that are currently there, and the companies employing them are looking for ways to get them, as well as their families, often out of the danger zone. One company specializing in such global rescue operations said they received 1,000 requests within 24 hours after the war started. And to compare this to previous events after Hamas attacked Israel in 2023, there were also around 1,000 requests, but over the course of several months. So this seems to be a volume those rescue specialists have never seen before. Well, not entirely surprising, as this now covers a much larger area, of course, and including the Emirates, which have been seen as a tremendous growth opportunity for Western companies in many sectors.
How are these rescue companies extracting all these, business people?
Yeah, Ladi, the first question is really, at this point, can they even get them all out? We are hearing that some requests are just impossible to satisfy. One manager said that they were asked to evacuate a team of 80 people for a company, quote, by tonight. And they said it's virtually impossible, besides the fact that often only small groups can travel. Anything you're trying to do in that region now, it takes a lot of time, mostly because the airspace over much of the Middle East, including the Emirates, Qatar, parts of Saudi Arabia, Oman, that's still partially entirely closed, and in other parts at least restricted. That means that most of the movement of people has to be done on land, and the most popular option for many caught there right now is a long drive to Muscat in Oman, which could be done in cars, sometimes sometimes in small vans, depending on the sheer availability of vehicles. And from Oman, then ideally, one could board a flight out of the Middle East to a safer location. Mostly that would be an airport in northern Africa. And from there, one could find another connection. However, traveling like this still means there's documents needed. There's not much luggage allowed, and there's always risk involved. And according to security experts, that risk is growing as the war goes on, as Iran is expected to retaliate asymmetrically, meaning, of course, they, as they are attacked, attack other countries, third countries like the Emirates.
So what about the cost of these evacuations? How expensive is that?
Yeah, that very much depends on how companies manage to get their people out. If this happens by land, like you mentioned, with a long drive to Oman, then it's a couple of $1,000s per person plus whatever flight they take. But we're also seeing a huge request for private jets for the region, with some providers specializing in flying people out. Now, that still wouldn't happen through any of the major airports in the region, Dubai, Abu Dhabi, Doha. But if evacuees manage to get to a smaller airport, or to get to Muscat, they can be flown out on a private jet, and those prices have just doubled as companies are eager to get their people to safety. One private jet service company said that a regular flight between Oman and Portugal, that's a route they've often taken, that would have cost $100,000 for a group of 16 people, but that price just shot up to $200,000 with the huge demand that they've been seeing.
All right, Lars, thank you so much for the updates this week. We're definitely hoping for de-escalation, going into next week. Thank you so much, and enjoy the week.
Certainly. Thank you, Ladi.
All right, now let's get a check on what's playing out in the crypto market. And definitely, we're seeing a pullback when it comes to Bitcoin and most of the top altcoins there. All red at this point. A pullback, losing the 70K level. That's for Bitcoin. Ethereum still holding above $2,000, but we'll see if that manages to hold. And few pockets of green, the likes of stablecoin, USDE, Leo, and Tron managing to stay in the green. Some of the headlines now. We see Western Union, they've expanded further into digital assets with the launch of the USDPT, a $3 billion US dollar denominated stablecoin built on Solana. The launch coincides with Western Union's unveiling of its digital asset network designed to link digital dollars with real-world cash access. This move marks a significant step in connecting cryptocurrency infrastructure with traditional financial services. Let's bring in Rume Ofi now. I believe we have Rume. Great to have you, Rume. So it's been quite the week this week with Bitcoin. It did pull back a lot, over the weekend. The only asset class that trades 24/7, even on weekends. We managed to get above 70,000, but we're seeing a drop below that. How are you seeing the market play out?
The market is responding to exactly what is happening to Iran and the rest of the Middle East countries over there. You don't expect the oil price to go up, and Bitcoin will be healthy, So all of those challenges will always come because it's still risky asset. So we just have to endure all of those challenges right about now. But we're going to see a lot of changes. The world is changing gradually, and a lot of things are happening with all of the US coming up to challenge all of the or lead this war. People are going to see that the US actions are becoming so much. They are going to flip to some of these alternative ways to do stuff that actually takes them away to have anything to do with the US currency or their economy very soon.
Right.
And so I'm not surprised. A lot of things are going to happen. That's what the market's reacting to now.
Right, and we've seen, a couple of wars so far, and this recent one seems obviously digital assets play a part, with wars. But let's flip over to another story now. We see Nedbank. They've announced a strategic partnership with Crypto.com. That's in South Africa. Talk to me about this. How critical is this partnership?
The partnership makes a lot of sense. The partnership is to make the bank in collaboration with one of the biggest crypto assets platform, Crypto.com. Is a very fantastic partnership where funds can move. They don't have all of the challenges of, banks have their way of doing things. all of these bottlenecks, gatekeeping here and there. We're partnering with them, liquidity movement, and also the South African rand doing transactions with cryptocurrency, then flipping it to USDT stable coins and all of those things makes it practically easy when the collaborations come in. And sometimes I begin to wonder, Nigeria is the giant of Africa. So why is the giant looking from the sidelines right about now? We've been advocating for all of this for a while. And unfortunately, we're not seeing what exactly is happening with this whole thing happening in a place like South Africa. They are leading somewhat, and we are the most populous black nation, and we're supposed to be ahead of all of this. Fine, we have ISA. We see the federal government come up with the virtual asset federal asset commission, right? Or coming up with this central bank and a couple of agencies of government, but that is not enough. We need to put all of the most important things forward to see where there's clarity, because investors will only bring money where clarity is certain. They don't gamble. Investors don't gamble. They put their money where their mouth is. And I think the time of always speaking and having to speak on deaf ears is past. The world is moving ahead. And we need to really make a lot of things work with all of these things happening. We have example in Africa. So it even behooves us to pull further. So I mentioned maybe because of the elections are coming, it could be a rethink towards all of these things, but I think it should be done really fast. Some of these companies that are partnering with all of these banks in these countries are supposed to be coming to do that. But aside that, our local banks should be partnering or doing sandbox with some of our local platforms here. We have local exchange platforms from Nigeria, I don't want to mention some of their names, but we have builders here. So if some of our big banks are coming to say, we're going to see how you can scale side-by-side blockchain finance, which will help us at the end of the day, we'll move forward. But it's looking like as if they don't know. But I can assure you that they have understanding of all of this technology and how it helps transactions, but they're not just taking it serious.
All right, I guess so much to unpack there. And definitely, we want to try and lead, when it comes to most of these technologies. But thank you so much, Rumi. Always great to have your perspective. Enjoy the weekend.
Do have a very fantastic Friday, laddie.
Thank you. All right, so yes, as I said before, it's been quite the week. And going into next week, let's hope for de-escalation and let's hope for these markets to, stabilize, going forward. But thank you for watching Business Incorporated today. I'm Laddie Williams from the team right here at Channels HQs. Bye for now and enjoy the weekend.